one thing that I'm still learning after this 5-6 years of trading is necessarily not trying to catch the high, right? So I definitely still have my elements that I'm still working on, right? Not trying to catch the high. I'm really good at catching the low for some reason, just because I'm really good at my short positions, but my buying positions or my finding the top before I'm shorting is definitely on my back testing, it's shown that statistically I'm like at a 40% when it comes to that. So I'm definitely working on that. So it's becoming a lot more. It's coming gradually better. So I'm going to be honest with you guys. I'm not the best at that, but I'm getting a lot better at it. So what we're talking about, so moving back to where price is right now. So I wanted just to show you guys exactly where price is leading up to. So the reason why I do what I do, you guys, is because I don't like to just give you guys a consolidate or understanding of price is showing right then. Like, I like to give you guys first my overall analysis. Like, I have to go backwards because it makes me understand price more when I go into it and I go into rhythm, right? Just like when you're a gymnast, right? You're not going to do like some crazy, acrobatic tricks. You're going to go into that, right? You're going to level into that. And that's when you do those amazing tricks because you have the momentum. So the momentum is definitely, like, I was a high jumper in college, and basically I had a 7-step count. So my 7-step count was essentially that I would do my 7-step, but that was the momentum that I got when I go over the bar. So that's what we like to see is that we like to build that momentum up. So right here, when I'm doing this, I'm showing you like, okay, in formation. Okay, I see that range consolidation, see that stop hunt to the down. I see price probably going to retest these lows, trap these sellers one more time before we move price back up. And then we're going to start to see market volume have to have a huge breakout to the upside, which then we're going to see those 3 levels of rise, which is going to be like 1 level, 2 level, 3 level, and then we're going to see that huge breakout to the upside between February and March. That's where most of the time the market does huge runs for the year. It's between February and March. Just letting you guys know that that's when the market usually does huge runs in the market. So just like how we saw crypto 2017 going to 2018, which is last year, we saw that huge spike to the downside. But if you guys look at crypto, when did it do those huge break to the downside? So we can go back. It was between February and March. So this is February, right? So we had that January 1st, and then we had that February, and then we had March. So this is basically the second biggest run of the year. So this is just something that statistically, for some reason, that's just how the market is showing right now. So I'm going to erase all this stuff because this is just a little too much drawing. So hopefully that answers some of your guys' questions when it comes to market predictions on the Great Britain pound. So I'm going to map it out for you guys, and I'm going to just break it down step by step at this point. And I'm going to go over Ethereum and Bitcoin in a second. Let me just break this down and give you guys where our market prediction. So as we can see, that market value, so 48%. Right now we have 52% of traders are selling right now, right? 40% of traders are buying. That's all good. We have to make for us to make money, someone else has to lose money. That's just how it works in the Forex market. So we're gonna break it down. So as we can see, we're probably going to see on a weekly chart. So I like to use the midweek reversal, but because this is such a high factual event, I don't believe the midweek reversal is going to have such a high element to this. So what I want to see first is that this is the peak formation low. So right here we see a peak formation low. So I'm going to map this out for you guys, and from there we're going to just kill it. So peak formation low, end of bearish trend. Oops. So peak formation low, end of bearish trend. So as you can see that this is the end of the bearish trend to the downside. Now we're looking for upside momentum. The reason being, you guys, is that there's 4 structures in the market, and one of these structures is called the markdown phase, which then follows into the market up phase. So I have a couple other great things I want to show you guys as well, but we'll save that for another video. So we can see that peak formation down. So we want to talk about this one more time for you guys if you guys are not understanding. So there's 4 market phases in the market, right? So 4 market phases. We have the first phase, which is the accumulation. Sorry for my spelling, you guys. I'm mad dyslexic. Market accumulation. We got the markup phase. Markup phase, right? Then we have the 3 is the distribution phase. Distribution whoops, like I said, you guys pretty bad at the spelling. But and then we have the markdown phase. So markdown phase. So that being said, these are the golden ratio, the golden tickets. I think this is literally the golden ticket for life when we're talking about trading. In my eyes, this is Willy Wonka going to the chocolate factory and getting that golden star or that golden piece of paper to go to the chocolate factory. Excuse me. So this is where we like to see market phases go to. So these are 4 different market phases. So if we want to go back into the market, we can see that we can talk about this in future videos, but we're going to basically just show you on a micro scale, because right now I can only show you guys on a micro scale because right now we're not necessarily in a we could actually. So let me show you guys what I mean. So what this is that price is in 4 phases. So 4 phases of the market means that there's first the accumulation phase. I'm just going to basically circle them. So this accumulation phase is basically usually the bottom of a trend, right? So accumulation, so when there's a trend, so this is the markdown phase. So this is the 4th leg of the structure, right? Of ST structure, right? So this is the 4th leg. So this is the markdown phase. So then it has to recycle, right? So the first cycle or the first leg, right, is the accumulation. So checkpoint. First leg, accumulation, consolidate price in a range, right? As you guys can see, was what, in 2016. This is when Donald Trump was elected, right? We saw the same thing come up. Then we saw the consolidation price and we saw more highs. So this is the accumulation phase. Then we can see the markup phase. So the markup phase is usually when price is moving to the upside, usually in a nice channel. So you can use channel breakouts. It doesn't really matter. So nice channel, right? So as you can see, this channel was then formulated. So then markup phase, check. Then we want to see the the distribution phase. So the distribution phase is basically when the market phases are in one area showing a consolidation at the high peak, which we like to call peak formation high, which is another way of saying the end of an uptrend going towards the downtrend, right? So we usually see a moving average crossover at this time. So if I were to put another EMA, I could put probably let's make it cool. I'll put a 50 EMA, so I'll show you guys exactly what I mean. So if I put the 50 EMA right here, I know there's going to be a moving average crossover right in this area. So as you can see, like I said, you guys, moving average crossover at the highs, right? 1, 2. So after I saw these 2 moving average crossovers, I can essentially know that the price is going to be going to the downside. Another reason you guys can see that there's going to be a turn is called a divergence. So if you guys are new to divergences as well, so I'm going to actually map out all of them because I want you guys to understand all the reasons why market turns over. So first, we're going to look for peak formation low or high. You want to look for market divergence. If I spelled that right, I'm awesome. I didn't. Gents. Oh, that was just typo. Never mind. I got it. So market divergence. So a market divergence, it can be a bullish or bearish, and then it could be a hidden divergence. But we don't really talk about hidden divergence. That's just like, you know, it's just too crazy. So we don't like to talk about hidden divergence. So the reason and way, so these are the ways you're able to formulate where price is going to move. So we use market phases and we use formations. Peak formation high or low, which we can see that this was the peak formation low. We're going to draw that out for you. That is where price has been showing right here. So price has then made that low. And then once again, price made that high. And we will talk about the lunar and the moon cycles and how this plays, but not in this video. It's just I don't want to bombard you guys with too much knowledge in one video because this stuff is just obviously so passionate about it, but I don't want to go into like, you know, talking like that crazy talk right now. So that being said, so we can see that peak formation low established right here. It kind of makes that peak area, and then we see that peak formation high, which we can also call the M formation, which it made an M formation as well. We can map that out as well. Market makes M formation. M or W formation. So that is another one why price will show reasons to reverse, right? M and W formations, 4 market phases, hidden divergence. So we're going to look for this divergence to make sure that this is accurate, because I don't want to give you guys something that's not accurate, because that's not who I am. So RSI, let's look at the RSI right now. Oh, let's actually use the MACD. I like to use the MACD. It's a really good one. So we'll use the MACD right now. So I'm going to remove this indicator. Yeah, remove the indicator for sure. Okay, so not all of them. Not all of them. MACD. Okay, so here we see price, right? So this is how we map out a divergence, you guys. First, we have to look for the low of the peak where price is showing here, right? So, or essentially you want to look for that high. So you want to look for the high. So as you can see, this is the high, and wait. Let's find it. So this is basically that high. You have to map it out. But basically, it's like integrated together. So this is the high, right? And then we see that price is also showing here, right? So this is basically that high. And as we map that out, we can see that price is showing lower momentum. So price is moving lower, right? So if price was higher, if the MACD was showing higher, then we probably would see a move to the upside more. But MACD is super low, as it's losing momentum, it's showing a divergence, right? Because price is making a higher low and a higher high, and then stochastic is making a lower low and a lower low, right? So then this is causing that divergence. So the divergence is basically you go in the area where price, or where the indicator is showing, whatever indicator. So let's take the MACD off. Let's go with the normal 70-30 stochastics. That's a big one that a lot of people use. Actually, this is the one that I killed it on binary options with, that I love using. I don't really use stochastics anymore, you guys, or these type of indicators, just because I wouldn't say I've mastered price action, because then I would be making every price right. But I have a very, very determined fundamental structure on how price moves in general, based off historical data and percentage, and so forth. So let's just go back and see where we're talking about here. So if we see price then moving to the 4 to the upside, we see price then test that high. So high price tested that high. So let's map that out one more time. So here is the high here. And then let's go to the downside. Let's move down and let's see where it's at here. So then let's look for that high. That high is, so it's very in sync right now. So it's basically leveled. So if it's leveled, that shows that price is definitely losing momentum, right? So it's basically the same thing, but yet price is moving higher and higher and higher and higher. Well, if it's still the same on momentum, but yet price is moving higher, then we're losing momentum. Momentum is definitely stopping. So we can see that as a fundamental or technical analyst, we can see that that market price is different than what we have been able to confine as a probabilistic structure, right? So now we're looking at overjustified optimism, right? Overjustified optimism is basically when the market is in a new paradigm. So a new paradigm element is when essentially price is then showing more activity to the upside, but not showing and growing on the momentum on the indicator. So that being said, market needs to adjust and shift. So as we can see, market adjust and shift, and that's where we saw price then move from that high, right? Because all they did was that, well, this is the Brexit drop, right? This is that Brexit drop. Remember, you guys, that was a huge drop. And all they did was that they worked off that drop. So they worked off that drop of that Brexit information 2016, right? That huge drop. They consolidated price. They waited for about a year, or they took a year to retest price, but not break that same level that it considerably was at previously. So price then came to that same area, retest that high to stop out all those sellers that were like freaking selling like crazy in this area, and then once again selling again, right? So then they obviously were taking back all that profit, all that money, until they got to that even area of, all right, can't move any higher, we're out of range. And then probably it's going to be probably at the beginning of the year. Like I said, guys, the market works in these cycles, right? So we're going to go in that to another video, but just know that the market likes to repeat itself, and it works in these cyclical cycles, especially it does when it does the market resets. It has these crazy elements to it. So that being said, take a deep breath. So then now price is moving higher, right? So price has definitely moved higher, and then had that correction to the downside. So then this is that last level of support. So take into this consideration the support, because I know it's going to come into play later on. So let's just make sure that it does. So we're going to move past this, past this, past this, past this. And what do you guys know? Look at where price is now showing support at. The same level, the same area after this peak formation. So what do we call this? We call this a market anchor leg, meaning this is the anchor of that bullish trend. So now we're looking for buys, and all there was doing is retesting that market anchor leg. So all this was is trap liquidity. All they're trying to do is trap these sellers, and what they're going to do is that they're going to work off this low buy. That's why they made that huge spike, you guys, that other week, because they're trying to induce those sellers again. Why do you think they have that Brexit thing happening right now? Because they're trying to psychologically screw with your minds. They're trying to control your mind, okay? So what they're trying to do is that keep you in that FOMO, keep you in that cortisol, right? Animalistic state, right? Always fight or flight, right? Never at poise and ease. That's what causes people to make bad decisions. So these decisions are going to be amplified, and they're going to use this, work off these lows, or this market anchor leg, right? That peak formation, that market anchor leg. They're going to work off this market anchor leg. They're going to retest that same area, and then they're going to drop price one more time, and then they're going to shoot price up, stopping out all these traders that are sold right here. All these traders that are sold are going to be taken out. Mark my words, by February, March, April, we're going to see price be driven more than 1,000 pips. More than 1,000 pips. Reason being is because they're not going to work slow in the way they go. Market makers never work slow in the way they're going. They always push price super quickly, right? They move price so fast that you can't even see it, right? Just look at this. Look at this, for instance. Price literally went up what? In 21 days, which took them previously took them 117 days to hit from this high to this low. It took them 117 days to hit from, excuse me, guys, 800 pips, right? 800 pips. Took them 117 days. In 21 days, guys. And I'm super passionate about this. I just wanted to let you guys know that I love what I do. But they went up 1,000 pips. I mean, are you kidding me? Okay? So, like, just take this into consideration, guys. This is market manipulation at its finest. They will consolidate price for a long period of time. Keep you in this feeling of chaotic unknown, right? And then they will then drive price out of nowhere, right? Stop out all the percentages, all the trades, to then take back their money. That's why ECNs were made. That's why retail brokers, right? Before even the early 2000s, right? It was just banks to banks, corporations to corporations, high net worth individuals to high net worth individuals. There was no spot speculation forex market, right? There was no leverage investing. It was like you need $100 million to get in the ECB market or you're out. There wasn't any of this stuff. But then over time, the market then was shown, or the market makers in the ECN and the investment bankers, they started making these things called casino wheels. Essentially that's what so I was so I learned a lot of this stuff from a proprietary trader who traded for Citibank and JP Morgan. He's a really good family friend of ours, and he basically showed me the ropes of how the market makers work. So what he did was that he taught me these ways, right, psychologically, and he told me that, and long story short is that they made these cycles to knowing that 90% of traders will lose their account in 90 days. 90 rule. 90% of your account will be lose in 90 days, right? That's crazy. Why? It's because they don't teach you this in technical analysis. They don't teach you about stop hunts. They don't teach you about market layovers. They don't teach you about opening spreads. They don't teach you about consolidating price for high periods of time and then shooting up in 21 days, 1,000 pips when it took 114 days, right? They don't teach you about 92.6% of the volatility is ran by the investment bankers, that we're the lowest of the totem pole, that we get filled by an emulated market that's traded on a platform that's in-house money, that they are hedging against you because you're either in an A and B book. It's an emulated, simulated factor in the markets, you guys. And they don't teach you this in structure. They teach you support, resistance, right? Head and shoulders. They teach you double down. They teach you double top, right? They teach you all these things. It's like, great. But what do these take into consideration when I'm really trying to make some really big money and consistently make money, right? Not just have it for a short period of time, to consistently do that. And that's why we made this program for you guys. And that's why I'm working day in and day out making the best program for you guys, so you guys can have the best knowledge available, because I want you guys to not get caught in that 90-90-90 rule. I've been there. I lost $40,000 in 90 days trading the markets. Worst time of my life, right? Sweating bullets, okay? I made all this money. I was trading up and up and up. I was making all this money. And then in 90 days, right, I'll tell you, it was from 2016 of June. Yes, 2016 of June till August of 2016. I lost $40,000. $40,000, you guys. I was not even, I think I wasn't even 21. I was 21, just turned 20 at this time. Like, it was a mind boggler, you guys. I mean, this was literally like, this is my family's money as well, you guys. This is my family's money. Like, my mom, like, and my family were like, all right, Brent, you're doing really well. Because I made a lot of money previously, right? Turned 3K into 14,000, to 14,000 to 26, 26 into 62, right? And then, boom, $40,000 lost in 3 months, you know? That was the best thing that's ever happened to me and the worst thing that's ever happened to me. And I don't want you guys to have to go through what I had to go through to get to that level. But what I want to teach you guys is that you learn from more of your failures than your success, right? I was all happy because I flipped all that crazy. I flipped crazy money, right, in a couple months, right? Quit my job. I was working 2 jobs, working as an EMT. I was working as an EMT, and I was working at Best Western in Santa Barbara. And I was doing really well, right? Binary options I was doing horrible with. But then I got into really trading, and I was able to pay back business loans. I was able to buy myself a car, move to West Hollywood, you know, do it all, right? You know, do it all. It was just like this crazy thing. And then boom, 3 months later, I lost that $40K, right? So then how did I level myself up? It was through discipline. It was through saying, okay, well, this is what I have to do to get to the next level. And this is why I'm teaching you guys this stuff, is because it's super important that you guys know this, because I want you guys to be prosperous, and I don't want you to have to go through that huge learning curve that I had to go through, right, before you became profitable. And that's why, you know, teaming up with Naeem, you know, he's such a inspiring individual himself, you know, such a young age, being able to succeed and do so well in the markets and so really good. He just knows a lot of He's a really good trader. He knows a lot about the markets. He knows any type of market he knows really well. So teaming up with him, the universe obviously brought us together to work together, and it was just really cool for having us millennials, and we call ourselves millennials, right? So millennials, right, to give knowledge, right, to people, because I learned all this stuff, and I'm telling you guys this because I wasn't perfect, right? I had times where I failed, right? I did horrible trades. I revenge traded. I traded until I literally puked one time. I freaking was trading and constantly staying up night over night, right? Doing all types of stuff, doing way too much, and then not seeing any results, because it's not about how hard you work. It's about how your plan is. What is your plan? What are you doing? And what is consistently showing you results, and what is consistently showing you failures? That's all that matters. Everything else, throw out the window. You don't even need to read another personal motivational book for the rest of your life. Just know what you're good at, know what you're bad at, and focus on what you're good at and work diligently on getting better at what you're not good at. And that's all you have to do, and you'll be the best person that you can be possibly. And I'm taking this because I'm doing the same thing every single day. I'm trying to be the best as I can do. So that being said, you guys, we went over all the markets. I wanted to leave you guys with that because, it's just something that obviously I'm really passionate about. I love trading. I love helping people, create financial abundance, financial prosperity, and moving into that next level. That's just something that, maybe I was put on this earth to do, or maybe something that I just love to do. I love charts. I love looking at research and analysts and so forth. So this is Brenton here with Traders Profit Club. Sorry that I couldn't answer you guys' messages today. Oh, finally, yes, you guys' things are here, so awesome. Sorry, so earlier I wasn't able to see you guys' messages, and now I can see them, so awesome. I'm so glad that I can actually see them. Look at the drop after the vote. So yeah, so the drop after the vote. So the drop after the vote is basically, so I'll show you right here. So the drop after the vote. So here is that big breakdown, right? So if we're going to go to the levels and see where market is right here, that market price is showing you, this is where, I'm telling you guys, so this is where market is going to just work off this previous level. It's not going to break this level. It's going to work off this level over and over and over again. This is what the level is going to be working off. Reason being is that, excuse me, right here, this is where market's going to be working off. So if we look left, structure leaves closed. We'll go to here, we'll see price, then make that market anchor leg, which is off that peak formation low. Market then drove up, drove back down, right? Test to the downside, and it's working off that same level as previously. It's working off that same level. There's no, that whole range, all this was just a cycle to just evolve itself once again. All this is, you guys, look at it. Same thing. Market accumulation. And I'm just going to box it. I'm not going to put it into typing this time. So what is going on? My goodness gracious. I'm just going to use my drawing thing. Okay, so market accumulation, market up phase, market distribution phase, market down phase, market accumulation phase, market up phase. So let me now, whoops. Market up phase, test re-high of that highs, right? Make that information, consolidate price, market down phase, accumulation phase, right? Test that reload, make that double bottom, then consolidate price, right? It's just over and over and over again. It's just going to be doing the consistently the same thing. I mean, it's going to be not obviously this easily predictable, or else everybody would make money. But take into consideration, guys, there's only 4 phases in the market. These 4 phases are going to just show where price is going to be. And so forth. So once they realize that they can take money from the pockets of average retail investors, exactly, Justin. That's exactly what they do. They just are looking for the average retail trader who doesn't want to look into it, doesn't want to research, doesn't want to put in the work, put $50,000 or $60,000 in the market, right? And then 3 months later, you blow your account, right? You'll get lucky probably for a month. I'll give you a month and a half, 2 months longest that you'll get lucky, unless that you are just born to trade and you just know price action, market psychology, market momentum, then kudos for you. Awesome. But most of the time, statistically, I mean, casinos are in business because they do statistical strategies, you guys. They don't just I'll make a casino and hopefully we'll make some money. No, they back test this before they even think about making this, right? So the same thing with the retail markets. They back test how much people are, they work off your psychological aspects. They know how the mind works. They study human minds. And then after they study the human mind, then they categorize humans into different wavelengths. And then after they have these wavelengths, then they not manipulate, but yeah, eventually they manipulate you. And then they manipulate price, and then they manipulate what you believe is true and false, and then they eventually lose price. So do we mean that one that happened just 30 minutes ago? Okay, so the one that, so this is the 4-hour chart, so we can look at the 30-minute chart, but essentially it's all relative. So what I'm talking about previously is that, I'm gonna move all the drawings. So as you can see, yeah, the 30-minute chart, right? So this was the 30-minute chart. This is where that break to the high, right? So if we're to look at the break, let me just, whoa, it's looking pretty weird. So yeah, so break to the high, right? So yeah, market is definitely looking bullish right now. I'm not going to buy this yet because this is just a straight leg. I don't buy straight legs, especially if you're already at that high. There's no reason to buy that. You're going to definitely have some drawback. So wait for that drawback first, consolidate price, and then wait for that next level of buy. So I'll definitely have a buy signal for this soon enough. And as well as the Euro USD, I'm going to have a buy signal for the Euro USD as well. As you can see, that market price is already showing that inverse head and shoulders, waiting for that second leg to be formed, and then having that buy position. We can see that price stochastics showing that lower low, and then we're going to see that upwards to the momentum. We already made profit on you guys because this is basically a flag pattern. If you guys are no flag patterns, because that is a thing technical analysis does. This is a flag pattern, consolidate price in this flag pattern, then a breakout to the upside to retest this market psychological numbers, as previously shown in our market statistical things as well. So I'm going to be doing some of these as well. So we are in down phase and accumulation phase to go up and test highs. Exactly. You're exactly right, Michael. And parliament vote. So yeah, so the parliament vote. So I'm not really big on news because news is all priced in. So it could be CPI numbers, it could be GDP, it could be non-farm payroll, it could be all these. It's essentially all priced in. I'm not really like going to be changing my whole strategy on where price is going to be. I've done this for so many years. I know that price barely moves even with any of these breaks. So like I said previously, guys, we saw that Brexit, right, in 2016, that huge Brexit where it dropped like around 1,000 pips in like 3 days. Or then essentially they basically just moved off. It's not that I know what they're going to do, is that I expect them to do something like that in the meantime. So as you guys can see, this is what, no, this is not it. Oh, I'm on the 30-minute chart, that's why. So what do they do? So let's go back to 2016. I'll show you guys exactly. So I'm gonna show you guys exactly why I don't really listen to news at all, period. Because news is just propaganda. It's just false. It's just false illusions trying to break down your subconscious mind into factoring things that are not really realistic. It's an illusion. So all they're doing is that they're breaking down price, right? Obviously, we had that huge 1,000 pip drop. Everybody went FOMO, went crazy. Oh my God, it was insane, right? So many sellers got trapped. Then they got trapped right here. So what they do, guys, I'm gonna draw this line, and I'm gonna show you exactly why I don't listen to fundamental news. So let me just draw this line, you guys, all the way across and see where price is exactly right now to where it was previously. Because that was a bigger, way bigger news event than this one in general, right? So let's keep on going. So we worked off that low. Where are we at now, you guys? Exactly. Same area as previously. Reason being, they want to work off your fear. They work off your fear. They work off what you are feared of. Because when they have you in fear trance, then they can profit off you. That's why people make a bunch of money when things. Why do you think people saying going out of business sale, right? Or you know, only 5 left, right? It's because they want to hit your limbic mind. Your limbic part of your mind is a part of that trust in that creation of of um of wanting, not wanting something. That's your cerebral cortex, but your limbic mind is that I want to be able to believe and trust you, right? That I love this. I want to believe and trust you. They know how this works, so they will work off these levels. They will. That's why they consolidated price for so long first before they dropped price and moved higher. So the same thing that they did is that they worked, and you see it. You guys see this? Like, I hope you guys understand what we're talking about. Is that yeah, I mean, I'm not essentially saying buy right now. I'm saying that in the near future, it's definitely a buying situation. It's not a really reckless time. Reckless times are essentially what, there's no such thing as a reckless time in the market. It's just essentially what our perception is on what recklessness is. So like what recklessness means on where we're talking about recklessness, and I understand where you're coming from, because like it definitely takes into consideration, but forget the smoke and mirrors. Like just release all the smoke and mirrors from the area, right? Just think like without any without any attachment to the outcome. Just think, if you're a trader right now, and if you see where price is showing where all of these traders are still probably trapped in the same area where it did 1,000 pips in like 3 days, do you think price is really going to move lower and break that area? Of course not. It's going to give you some type of false agenda, which is right here, that break to the low, false agenda, FOMOing traders. Then they're going to make a news event like they did. They made a news event, so that's why what happens. 52%, a lot of people are shorting. So what are people doing? They're shorting the market. So the bankers and institutions are going to play off that fear. They're going to play off that fear. They're going to drive price lower. And then once they have enough traders built off that fear, they're going to drive price up and retest that 1300 level, 13100 level, which then we're going to accumulate probably 1,000 pips to the upside. First 500 pips, and then obviously 1,000. So that's the reason why. So essentially, I don't know that. I don't know that, Michael. I don't know how they price in news exactly. I just know that they work off your fear. They work off determining factors that you've been ingrained since you're a kid, psychological behaviors. They've been doing these studies for hundreds of years, you guys. We're not new. We're not like, we're evolving as humans, but we're not like evolving like systematically. These systems have been in place for hundreds of years. Like we're not like coming into a new age where everything is coming differently. There's different things available, but the systematics of how the brain moves, they've been able to manipulate and structure these subconscious behaviors since we've been children, right? You get a bad test on a school grade, you get a D or F, you're going to be a failure, right? So subconsciously, you're looking for that worthiness. So what do? You do well in school, right? And if you don't want to go out, you don't want to be a loser, you don't want to be a loner. So what do? You go into the program, you go into conformity. That conformity is a subconscious behavior to not take risks, and that risk makes you a non-adjustable, adaptable creator, and that's what happens in the markets, because 90% of this stuff is psychological. Only 10% of it up phase in 30 minutes, market after 9:30. So my test, I have to make sure I understand what you're saying. So you're saying up phase in 30 minutes, market after 9:30. So market up phase. So right now we're definitely hitting New York session or going into Tokyo session. So the consolidation for the day is probably going to be another 30, 50 pips probably for the rest of the day. There's not going to be a lot more momentum, more volatility. The news event has already happened. The price has already been priced and established. That's just a moving indicator of where price is going to be moving a little lower, a little higher, depending on what structure you're showing. And then from there, we're going to see upside momentum. It's just about buying and selling at that high and low. That's what that's why it's super important to find those lows and highs and where price is going to be, because finding those lows and highs is definitely going to give you a very, 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 very good drawback stage and strategy and profit as well. So hopefully that today's video helps you guys, and hopefully that I wasn't really ranting as much as I hopefully not to, because I definitely don't want to rant. I just want to show you guys that a lot of this stuff, and I don't want you guys to get caught up in this stuff. So if I hopefully you don't feel like I'm talking at you, because I don't mean to do that at all. At all. Period. I don't want to talk at you. I definitely don't know everything, and I'm still a part of the journey as well. Oh, I just figured this out. So before I leave, I want to show you guys exactly what price is probably going to do. So price is definitely showing that W formation. I'm going to put down the indicators first before we see the EMA, and then after the EMA has been established, then we'll see that moving indicators. So we'll see that price is then here in this 200 moving average. So this 200 moving average has been indications of, and then we see the 50 moving average. So 50 moving average and the crossover. So if we see this crossover at the minimum, and then we see stochastic is showing undersold. So what do we like to see, you guys? We're going to see that nice, beautiful W formation. So that W formation is going to see that this is the beginning and the beam. So we're going to definitely short this position, short it for a little time. We see stochastic is showing short on the 4 hour to retest these lows, show that double bottom to retest the same positions, especially to work off what is going on with the news events. These fear faculties are going to take into consideration. Definitely apply more of that demand for the structure of that FOMO, which is going to definitely integrate a lot more sell positions. After we see those sell positions, we're going to then see an uprise to market momentum. So that is my hypothesis for the Great Britain pound to the US dollar on how the news indication. All this is, you guys, was just a something. Is this all in the mind? So it was essentially just a mind game trying to play mind tricks on you. Because if it was a huge market event, we would see a huge detrimental time frame, right? And we're not going to see a huge market retracement. We might not even see. This might actually take around 6 to 10 days to establish. This might take a long time. We might see a lot of time to be formulated, because the next moon cycle isn't until the 21st or 22nd. That's when the new moon is. Next Sunday is going to be the next new moon or full moon. So after we see that full moon, we're probably going to see reversal of that price. So I'm going to wait for that full moon to definitely, and if it does hit at that second leg, if you guys don't know, I use moon cycles to integrate where reversals and breaks of huge resistance and supports are. I've been heavily accurate for about a year and a half since I've been using it. But you know, I'm going to talk more about that later on. It's a whole nother ball game. And you just have to be very optimistic with it, because it is something that, you know, people are gonna be like, what are you smoking, dude? Like, I'm not gonna lie, people are gonna be like, all right, well, what? But it has a lot to do with our electromagnetic frequencies and what we are producing in our body. So really awesome stuff, you guys. Happy to be on this live stream again. We're gonna put actually a trade on this. After in about 30 minutes, I'm gonna put a trade. I'm gonna put in the Discord, and then I'm gonna be definitely going to see if this Euro USD trade is going to be going along eventually. We got stopped out again, so I'm gonna wait again. You guys, I'm gonna wait on this trade, just because we definitely I got shorted out twice in this trade already, so I'm not gonna do a third time, right? This is no reason. I'm gonna wait for a nice consolidation break. So I'm gonna wait for this nice break to the downside or to the upside. So we already made profit here, but then obviously we were trying to reverse that. So we don't want to do that yet. Be patient. So then, yeah. So I'm like a sponge when I watch market shoot. Much appreciated. Hey, Justin, thanks so much, man. I really appreciate it. Thank you guys so much for being on this live stream. And thank you guys so much for being, you know, just optimistic. You know, a lot of people are very egotistical, and you know, we all have our own ego. I mean, that's just what we've been born with, and you know, it's about, like, you know, knowing that we don't know everything. I don't know everything. I don't know anything, right? I'm just a guy that, you know, just started trading, you know, a couple years ago, and this is just something that I've learned, and I thought that it does work, and I've seen it work, and I've, you know, seen countless of clients make money off the strategies that I made for them. So, you know, this is just something that I'm just giving to you guys, because I really want to be able to make this, you know, affordable to people, for them that, you know, that can't do my private training, that can't do my private consulting as well. So, you know, we're just all in this together at the end of the day. You know, we're all in this together. So I want to make this available for everybody else. So, I'm going to be in the Discord, you guys. I'm going to be definitely taking some trades for the end of the day. I don't really trade on the end of New York session just because I don't like to have nice drawdowns, but I'm going to be definitely doing a couple signals. Just looking at we already have one signal for the USD JPY. It's definitely fluctuating, but we're definitely going to be seeing a nice drop in the near soon. Consolidation, mid reversal, Wednesdays, we're going to probably see that next retracement. So we have our stop at 108.750 on this trade. And we're definitely going to be waiting for that nice retracement to downside. As you can see, that market, Bitcoin, definitely. So to answer you guys' Bitcoin question, where do I see Bitcoin going? Essentially right now, it's making that lower low to that lower formation. It's making that market anchor formation, just like price did with the rip and pound. Where we see that market anchor formation at previous structure. Price didn't make that market anchor formation, then went up. You can see the same thing happen on Bitcoin right now, kind of, you know. So price is definitely making that market anchor formation. So then we're gonna definitely see the upside in the near future, but not yet. We're gonna see the US dollar head to the downside. That's why we're definitely seeing that nice head peak formation to the top on that US Treasury bond. So we're gonna definitely be seeing that downwards momentum to the stopping out and trading all that downwards. So we're going to see a lot of money in the near future, guys. So just don't be early to the party. You know, wait, be patient. So that's why I'm being patient right now, and I'm waiting for those nice runs. Definitely going to be putting those in the signals in the Discord. So moving forward, we're definitely going to be going higher. So that big market anchor leg is a signal of move higher. So that big anchor leg is signal to move higher. Yeah, it's just making a foundation, basically, Michael. It's making a foundation, so then price will then have something to work off, because price essentially needs something to work off. That's why price only is moving 50% of the time, and then it consolidates 50% of the time. So there's a 50-50 structure in the market. 50% of the time it's consolidating, 50% of the time it's trending. So the market needs something to work off for it to be a valid structure in market. So that's why that market breaks and retests, hits highs, retests highs, hits lows, retests lows. Is because market has to work off something to make it a valid structure in a valid market in general. So that's why a lot of these things are so cyclical and so repetitive, and why psychology is repetitive. Just like a human behavior is very repetitive, a market cycle is really repetitive. They're both very similar. So So yeah, you guys, I'm super excited. I'm over a little hour on this, so I'm going to definitely be closing this up. But if you guys have any questions, please put in the Discord, and I'll see you guys tomorrow for another video. All right, have a great day, you guys, and make sure to stay safe and stay profitable.